Good afternoon, everybody, and welcome to the LendIt Fintech Weekly News Roundup. Back in the saddle again this week. This is Peter Renton, Chairman and Co-founder of LendIt Fintech, joined as always by my good friend and colleague coming at us from his hotel room in Boulder, Colorado. How are you doing, Todd?
Yeah, I'm good, Peter. How are you?
Doing great. And we have, for the first time, a special guest today, Kevin Travis, journalist extraordinaire for LendIt Fintech. How are you doing, Kevin?
Great. How are you guys?
Doing well.
Welcome to the show, Kev.
Yes, welcome to the show indeed. So let's kick it off. Another busy news week. And we're going to kick it off with the same company that we kicked it off last week, or Todd kicked it off last week with, and that is Apple. Apple continued to generate a lot of headlines and a lot of articles. So this was in Bloomberg this week. Apple is working to bring more financial services in-house, and they have an actual project that they've named it. It's called Breakout, and this is going to impact the the partners they have, like Goldman Sachs, Green Dot, that they partner with right now, and Apple. They've just become. I feel like they've become this behemoth in financial services. With obviously Apple Pay is getting more and more traction, and now they're sort of slowly sort of spreading their tentacles. It feels like everywhere. What do you think, Todd?
I think you're right in most of what you say there. I think the one caveat with Apple is they do seem to be very focused on kind of keeping it all the Apple ecosystem.
Mhm.
Like, most of I think the buy now, pay later stuff, they want to keep the transactions in the hundreds of dollars. They want to keep, at least according to what Bloomberg's reporting, the larger credit lines would still be with Goldman Sachs and the Apple Card. So it does seem like, they are the X factor.
Yeah.
How many people have iPhones? You're talking about hundreds of millions of customers.
I think it's a billion now. A billion.
Yeah, there you go. But it does seem like they have this vision of there's this Apple ecosystem, and that's what it's for. And do they break out beyond that and just say, hey, we're going to become a bank eventually? I don't know. They could certainly go in that direction eventually. They have the technology, they have the now financial services experience and wherewithal. So to me, I think it's one of the more fascinating stories in financial services over the next decade. Probably that, crypto, and maybe a couple other things that rise to that level.
Yeah. Kevin, what are your thoughts?
Well, I have to agree. I think some of their other providers for some of their financial services, like Core Card, Core, Green Dot in the U.S., their stocks took a hit because I know last week with the acquisition of Credit Kudos, we were wondering, so what is it for? They do in buy now, pay later, but it's just generally to build, dare I say it, the super app that we might see out of. I mean, who else in the U.S. could do it? But maybe they could. But Apple Payments alone is like a 70 billion business. And those core providers that stocks took a hit are only in the U.S. So at least in the near future, they might be looking to expand through, as Todd said, that Apple branded experience. Everything from the top down is all Apple products.
Yeah, and I feel like the Apple Wallet that I use Apple Pay from time to time, and it has a lot of potential. They're doing virtually nothing with it. I mean, they're doing payments. And that could be the Apple Wallet could be the super app, certainly, if they decide.
Well, I mean, just think now. I mean, I get airline tickets were in my Apple Wallet this morning when I flew out to Colorado. They have Apple Pay.
Yep.
I think the real change, and it's moving in this direction. I think, Peter, you mentioned you've tested this or you have this, is when passports and driver's licenses move to the phone. And when that instance happens, then the wallet as a physical thing goes away permanently.
Right.
And your phone, and that maybe they're waiting for that day to happen, and all of a sudden they take the wallet to the next level. But we're already moving there.
Yeah.
And it's just, to me, it's a matter of when, not if.
Yep. No, I agree. And yeah, Colorado does allow you to have your driver's license on your phone. And there's a Colorado app that have your driver's license, car registration, COVID vaccination thing. It's all there. Anyway, we could talk about Apple for the whole 30 minutes because they're such an interesting company, but we will move on to another interesting company, Visa. Visa have launched an NFT program, and this is super interesting because they're basically, like, it's called the Visa Creator Program, and they're working with all the kind of creators of NFTs, which are artists, musicians, filmmakers, all that sort of creative element, and who traditionally aren't super up to date with what is going on in business and technology. And I know that's a generalization, forgive me, but they're going to basically give it's a 1-year program that they're going to teach them basically how to build their business with NFTs. And I think Visa are really another interesting big behemoth that have put their stake in the ground. So we are going all in. We're going all in on NFTs and crypto, and this is just another example of that.
I think the one thing with NFTs, at least today, are it's pretty limited to like artists and music, and that, like, the way they were describing it in the release was that, like, it's to all of Main Street small businesses. And I'm not sure if I'm connecting that dot yet, but I think the biggest value they get out of this is NFTs are clearly part of this new future. This allows them to use it and truly understand it.
Right.
Because to me, that's where, with firms like Visa or MasterCard or whoever, the only way that they're getting totally immersed in what this new world is if they do stuff like this.
Yep.
Which is use it. They bought the CryptoPunk.
Mm-hmm.
Now they're set up this program, and so this is how they get totally immersed. And then in the next couple of years, they say, "All right, that program's over. Now here's the long term thinking behind what we were just doing with NFTs."
Right. And Kevin is the only person who's actually created an NFT on this call. You going to jump into that program?
Yeah, I mean, I wish they would invite me. It sounds like they have not only Visa's big and slow, but they know what they're doing. They signaled that they're with the kids buying a CryptoPunk, and now this program. I think it's not. Todd was correct. Like, it's not just for them to showcase creators. They're learning from creators. Right. I think they're inviting in people already in the NFT ecosystem, as Peter said, to learn from them and to really figure out where Visa fits into this ecosystem, where they can build products to serve not just the people already in it, but bring it maybe to maybe Main Street America. That's definitely how I see like that developing.
Yeah, and we're certainly in the early innings of NFTs, and I mean, there's a lot of people who are extremely bullish that NFTs are going to basically rule the world. Time will tell on that one. I'm moderately bullish, and I think it's a good move from Visa's part. Okay, let's get into a couple of fundraisings. We had blockchain.com, just had one of the co-founders on my podcast a few weeks back, and they have raised a new round of funding. Doesn't actually say how much they raised, but it doesn't really matter. They've got, they're doing well. Blockchain.com raised at a $14 billion valuation. We do know 1 year ago they raised at a $5.2 billion valuation. So the money is still flowing into crypto, led by Lightspeed Venture Partners. I mean, I really enjoyed my interview with Nicholas Carey, one of the co-founders, and it's just, I think you don't see them as much in this country, but they're huge. Blockchain.com.
I think they've 1 trillion in transactions.
Right.
37 million verified users, 80 million wallets. Those are pretty big numbers.
Yeah.
I think we've had their CEO speak at our European conference in the past. While valuations and things on the investment side have slowed down in broader fintech, that clearly haven't slowed down yet in crypto.
No.
And I think the bet is, and I think the overall gamble is the big change in the last couple of years is there's no longer a look at crypto and thinking, can this happen?
Right.
There's an acceptance to it now. Now, what shape it takes, I think, is still an open question. But there is an acceptance that this is inevitable in some fashion, and so that's what VCs are there for, to take big bets. Some of these companies have already hit home runs and will continue to hit home runs. Other companies will flame out, but there's so much still to be changed and updated and transformed in financial services that that's the gamble that the most VCs these days are willing to take, and I don't think it's an outlandish one.
No.
Yeah, I would say the coolest part is definitely finding the price discovery of something that we now know is here to stay. Like a year ago, Coinbase went public at like 100 billion valuation and has since, or at least stock-wise, dropped by almost a half. But at the same time, we have fintechs like Nubank, a banking provider to about 40 million people. Their valuation was around 40 billion. And meanwhile, blockchain.com, they're not as big in America as I guess we know them around the world. But if they have 37 million users, we're seeing how even as a not public company and sort of still getting there, like Coinbase is so well established, they're still finding their ground and seeing how they're valued. Last year, there were 5 billion or so, and now they're 14. And that's a ton of money, but still it's not, I don't know. It's not as much as some of the other very well-established brands that are even newer, like Nubank, I guess.
Right. And the private markets are still, really rewarding these companies and in ways that the public markets, the public markets are a little bit harsher because, the private markets, you just got to have one person who really believes in you and they can set the price. Not so in the public markets. But anyway, let's move on. Cross River Bank also raised money this week, $620 million, or they announced it this week, $620 million Series D. Now, I remember it was back at one of the LendIts. I think it might have been 2015 or 2016. I can't remember where they raised like a Series A, and it was like, I think it was like 20 million, and people were going, wow, $20 million Series A. Now that's a $620 million Series D. Values the company at more than $3 billion, and they got some big names on board. A16Z co-led the round with Eldridge Capital. So Gilles Gade and his team continue to crush it, so it seems.
I mean, they were, I think, probably the first real bank that were considered a fintech bank.
Mm-hmm.
I mean, you had like FinWise and Celtic and others that were powering a lot of the lending ecosystem. There's one I'm missing in there too, but
WebBank.
There you go. Thank you. But they weren't thought of as the fintech bank. I think Cross River helped to change some of that, and now you have this litany of fintech focused banks, and now you have Cross River making this big push into crypto to probably be that bridge,
right,
from fintech to Web3, and so it's I think it's pretty interesting to see the story and where they've come from. Obviously, there's a lot of sharp people over there. We know Gilles, we know Phil, and many others. And didn't surprise me to see this round, even though it's a pretty big jump from previous funding rounds. You hear Cross River a lot when you talk to fintechs and others. So
yeah, you definitely do. And even in my short time writing and learning about the fintech industry, you hear Cross River a lot. You know that they are one of the best options for compliance, or if you're a startup looking for a bank partnership, you spend a pretty penny on them, but it's worth it because they know what they're doing. And it's cool to see. It's amazing to see that they're not just getting like a bank funding round; they're getting like a fintech tech crypto company funding round. It feels like.
Yep.
Yeah.
And it all began when they actually began in the lending space. Like it was. I don't know if you ever remember a company called Peerform. That was how Cross River got into the lending space, and to Gilles' credit, and then it was also with Green Sky. But to Gilles' credit and the team, that they've seen an opportunity that went far beyond the lending space, and they have embraced it. They've got a lot of different things happening. So good luck to them. Okay, I want to go talk about the CFPB. Rohit Chopra, the head there, had a speech this week where he talked about getting tougher, particularly on big banks doing repeat offenses. He's basically said that, these fines that we levy on these large companies, they just consider it a cost of doing business. They don't really care. And so he's talking about doing things being a lot tougher. I mean, in this article, they mentioned revoking FDIC insurance privileges. That would be astounding, because that would basically shut down a bank overnight, it feels like. But he said that these large firms need to get in line. So who knows if this is just talk, if they're actually going to go do something. I mean, it would be pretty amazing to do something that other than just a fine, where it really hits the bank's actual business practices. But who knows?
Yeah, I feel like in some ways this is is it kind of a warning shot to fintech and newcomers as well? Like, yeah, they mention the repeat offenders in banks, but is it kind of like, we're going after the big names, like, you like hint, wink, wink, like you guys better be careful too.
Yeah. Oh, for sure.
And so I don't know. I'd be stunned if they ever ripped away FDIC insurance. I mean, that would to me, that's like crossing the Rubicon, so to speak. I mean,
Right.
I just don't see that as even remotely a possibility. And someone like the bank lobby is that they would never let.
Yeah, there'd be lawsuits flying around. It would take like 10 years to get anywhere to go through.
And just think about all the systemic risk that could involve it. If it's the wrong bank, like JP Morgan, like
you can't do
60 million customer accounts. I mean, it's crazy. So I don't know. I feel like it's more of just a warning shot across the bow of the industry, as kind of, hey, eventually we're not going to keep letting some of these practices go. And Wells has been one of the worst offenders here with their checking accounts and others. It's like, I guess in some ways you do have to warn them, but I feel like some of it's more bluster.
Mm-hmm.
Yeah, and who does that? I hadn't thought of that, but who does that bluster really affect? Because it feels like there's a race to get FDIC insurance from crypto banks now, as like the last thing. They keep making a list of what crypto banks need to be considered a bank in the US. And one of the last ones is FDIC insurance right now.
Right.
And so if the newcomers if the big guys shouldn't be worried, because you can't take out JP Morgan. And if Wells Fargo was well handled with the reaction to their bad doings, so who's really at risk here? It could be the fintechs. I didn't even consider that. But Chopra started working as a regulator in 2008 when the CFPB was born because of 2008 and the financial crisis. So he definitely is out there, and this administration's out there with an axe to grind for sure. If you screw around, they're really they're not joking around anymore. But that's a big.
Yeah, I don't know. I mean, I think he just threw that. I don't think they would actually do FDIC insurance, but they did say Wells Fargo. I can't remember exactly what they did basically say that they had a cap on. There was a cap on their on the amount of capital they could lend, or I can't remember what it was.
Yeah, it was. I forget what it was, but they had to during PPP they had to go and get approval to lend beyond that because I think there was something with their ratio. The tier 1 ratio and the capital. That came out of Dodd-Frank and a lot of the stuff that happened in the financial crisis. That would bring it into like systemic risk.
Yeah. And so they have done something in the past that, well, I think that might have been the Federal Reserve that did that, but it was still they have done things that impact these banks. So maybe they'll fall in line. But anyway, want to move on to a story you wrote, Kevin. I know you wrote the Cross River one as well, but wanted to talk about Built Rewards, because I had a conversation with one of the founders in the last couple of weeks. Super interesting. Why don't you tell us a little bit about them and about the party on was it Monday night?
Yes, it was Monday night, and speaking of Wells Fargo, so they announced they are the main issuer and partner of a new startup called Built Rewards. It lets you basically use credit or direct ACH debit to pay for your rent with points, rewards, and stuff for travel. And it's the first major, because it's it's through MasterCard and it's this whole thing, but because it's the first major card issued by Wells Fargo, they did this whole big party with, it was nuts. The mayor of New York was there. Floyd Mayweather was there. They had A$AP Rocky rapping up in this brand new building by Grand Central Station. And I got the chance to use the card. It works. So far, I haven't checked out any of the points yet. It seems cool. But it is also the first thing when I got home from that event and I talked to my roommates, I said, "Oh yeah, I'm using this new card. I'm testing it out for my job for work." He's like, "Oh, who is it?" It's like, "Oh, Wells Fargo issued it." My friend Emu is like, "Really? They do?" Because what LendIt Chapter was saying is like, "Yeah, we did a good job actually slapping Wells Fargo's hand because they had an internal culture that was so bad. They admitted to not even a normal settlement. They admitted to a $3 billion deal for signing people up for credit cards they didn't want, basically."
Right.
And that's sort of funny that maybe that's one of the reasons why they haven't had such a big offering. But the Built people seem to know what they're doing, and I think they generally do and are interested in helping people make money or make something off of rent, which is your biggest purchase in life for most people every month at least.
Mm-hmm. Mm-hmm.
Oh, that was a lot.
It's, how many people are renters in the U.S.? It's
like 50 million or something, wasn't it?
It's a significant number, and a lot of those people will never be homeowners, and it's without a doubt an expense that they can't not pay. And so to do something that gives you something back for paying rent, I think is a pretty novel concept. By the way, our old office used to be next door to the Vanderbilt, the brand new Vanderbilt building. We were there as they were breaking ground.
Yeah, I remember that.
On the new building.
It's like 5 years ago, I think, wasn't it? It was a long time ago.
Funny to see that building now being built, but I mean, built by and a party with built. Play on words there, but I think there needs to be new innovative products for people that aren't in homes, that aren't the typical 750 FICO score and all this. Like they need to be a part of the rewards economy too. And rewards are only becoming a bigger and bigger and bigger aspect. It goes beyond hotels and travel now. It goes to everyday stuff, and you're going to see a lot of crypto stuff related with rewards as well.
Yeah. Well, the one thing that was most cool that I thought when I was chatting with one of the co-founders, he even if you pay your rent with a check, you can still use the built card. So what they do, or if you pay with ACH, you can still use the built card because they've got a deal with MasterCard where on rent payments, MasterCard is charging them $0, no interchange whatsoever. I'm sure Wells Fargo has also worked out a way to work with them there with not charging them anything, because you can then, because what they're thinking is, okay, we'll take a loss on the cost of processing those transactions with the hope that you'll obviously use the card for other things. But that's really cool. If you're paying your rent by a check right now, you can get the Built Rewards card and start paying it that way, which I think is extremely cool. Anyway, moving on, just this one caught my eye this week. Alvier, another one I've had on the podcast recently. They offer embedded finance solutions for non-banks, which I think is a really interesting approach. And they offer bank accounts. They have debit cards, and they offer payments processing, money transfer, all sorts of things. But they don't offer crypto. Well, they haven't. And now they're partnering with Coinbase to offer crypto. So now when you do get your, I don't know, like I'm not sure, some of brands they're working with. But you get your United Airlines bank account. You can now be able to trade crypto with your United Airlines bank account, if there is such a thing, which I don't think there is yet.
Go for it, Kevin.
It's pretty cool. It's I think they're using Coinbase's like Coinbase Prime. That's their business to business sort of setup, isn't it? Yeah, and it's cool to see. We've been used to Coinbase as like a consumer brand, and we've been waiting. I've been waiting. I just can't wait for their NFT platform that's supposed to come out this year. Very consumer focused, but instead they're sort of. It's cool to see them also making moves for business to business, because that's also a lot of what we cover at LendIt. And I mean, the only one in this space that's really offering like hard-hitting big products for crypto business to business, or at an institutional level, is like NYDIG. And we're friends of theirs. We work with them all the time. But it's cool to see someone else possibly offer like crypto as an embedded service. Now, crypto as an embedded service for an embedded service company.
Yeah, and I didn't even realize Coinbase had this product really until I read this article about LDS. So Coinbase are really getting into having sort of an embedded solution for people who want to trade crypto.
Just think of how quickly crypto has jumped fintech more broadly. Yeah. Ask anyone on the street if they know what fintech is. They probably don't. Or ask them if they know what PayPal or Venmo is, and they'll say they're using it. So they know what fintech is, they're using it. But ask them if they know what crypto is. They might not know what it is, but I guarantee you they've heard of it.
Right.
And so just that jump beyond, it's kind of that leapfrog effect. And stuff like this is only going to continue that same impact, getting into non-financial brands.
Yep. Okay, we're going to end this week with what I thought was a crazy story. Hacking again, the second largest crypto hack in history, or based on today's dollars anyway. Axie Infinity, which is a game that has characters which have value, which you can trade. I don't know, maybe Kevin, you've played it, but they stole 174,000 ETH, or almost 174,000, 25.5 million USDC. And interestingly enough, they said this wasn't from a technical flaw or a traditional sort of hack where they get in just for technology. They said it was a social engineering hack, which means they've just basically convinced somebody to click on something, and they got in relatively easily. So
it's like, which one's worse? I mean,
but the social engineering is very, very difficult to stop. So have you played this game, Kevin?
I have not. The floor price was already too high when I was looking at it in November to try to say, all right, I'll play this, see what it's like. But it's basically like Pokemon, where you have little monsters that fight each other, but you can breed and sell those monsters and their powers. And it's remarkable that it has its own internal economy with tokens and based on selling like NFT forms of those monsters, basically. It's nuts. And to hear that, I mean, it wouldn't really be a month in the crypto world if there wasn't a world record breaking hack or thief heist in the crypto world. But to see it's social engineering, that's if you have a giant pile of money, that's why TradFi is so slow to do anything. It's because they have it under lock. To see it get manipulated just because someone convinced someone to give them a passcode, or they said they were an employee, who knows how it even worked, but that is startling and scary. I mean,
yeah.
I guess in one way, it's the better version of the hack for the industry is obviously the social one.
Right.
Because that means the technology is not being built wrong, or there's not a loophole in it. You can never change the social hack, because if you can convince someone, you can convince someone. But I mean, just awareness about this is the way to go about it. But I think the larger question is, stuff like this doesn't help the space overall.
No.
And so, I think there's a lot of things the market still needs to do. And hacks happen across financial services, but you don't want this to continue to happen at the wrong time. And it only then takes the guardrails and tightens it and tightens it and tightens it. So
yeah, it's not good look for crypto at all. They need to we need to try and reduce the number of hacks that are happening. But anyway, that is all we have time for today, I'm afraid. And we are going to be back at the same time next week. Before we sign off, though, just a quick reminder: LendIt Fintech USA happening in New York City. Go to lendit.com. We're going to talk about all the big stories, all the big issues of the day will be discussed at the Javits Center at the end of May 25th, 26th. So lendit.com, get your ticket now. Todd, thank you so much. Kevin, you did great. Thanks for joining us. And we'll be back same time next week.
Thank you.
Good first show.
Yep.
See you,
Bye.
Peter.
Bye.
See ya.